This is Nightly Business Report with Tyler Matheson and Susie Gehring. Brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Real Money helps you think through ideas for investing and trading stocks. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media. We are TheStreet.com.
Market milestone. The S&P 500 hits a new all-time high. What's driving the rally? Which sectors are being left behind? And what's next for stocks?
Building a foundation. A home builder makes its debut on the New York Stock Exchange. So we asked the CEO why now, and is the housing recovery as strong as some think?
And made in America. You won't believe what a new company is manufacturing now in Detroit.
All that and more coming up right here on Nightly Business Report for Wednesday, April 10th. Good evening, everyone. The stock market, Tyler, just took off right from the opening bell, and it didn't stop till the close.
It is the rally that does not seem to want to quit. It may be getting a little bit repetitive, Susie, but it is hardly getting old for most investors. Stocks sprinted to more records today in a broad rally that pushed the Dow and the S&P 500 to fresh all-time closing highs. The Nasdaq, for its part, closed at its highest level in 12 years. Traders were cheered, among other things, by better-than-expected import data from China. That suggests that demand in the world's second-largest economy remains strong. The blue-chip Dow index surged 129 points, closing at a record 14,802, with 15,000 Dow in sight now. And the S&P was up 59 points, nearly 2%, fueled by sizable gains in some big tech companies. And the S&P 500 index up 19 points, and to get a new record high, 1587.
Now, another factor fueling that rally, some encouraging news from the Federal Reserve. The notes from the Fed's latest meeting showed that most policymakers want to continue buying billions in bonds every month to continue stimulating the economy, at least through the end of this year. Those minutes were accidentally leaked 5 hours ahead of time and came out before the stock market opened today, giving investors confidence to snap up stocks. Well, the Fed may have helped drive today's gains, but does the rally have staying power? We turn to some market pros for answers. Show me the money. Investors have been looking for big returns on their money, and it looks like they're finding them with stocks and less so with bonds. And the more the stock averages go up and hit new records, the more courage investors have to put stocks in their portfolios. The urge to buy is so strong that investors have been shrugging off bad economic news about the job market, as well as political tensions in North Korea. But despite all the new milestones on Wall Street, some market pros would still like to see the rally spread out.
In all of the upward move and all the new record highs, there is a sense of seeking safety and protection. It's kind of a dichotomy. If you look at the other markets around the globe, they're not all participating in the same manner. They've decided to almost begin to take the summer off already, and it's been the S&P and been the Dow Jones. That's encouraging. They're the two drivers here, but you'd really like to see it broaden out a bit.
Healthcare stocks, consumer staples, and utilities are popular with investors. They're also loading up on defensive names and big blue chips that pay dividends. Technology, materials, and energy are the underperformers and have been lagging the market.
We've seen in the first few months of this year, we have seen much more interest among mutual fund buyers to buy into equity funds. I think we're also seeing that. We're still seeing that, but also I think some institutions are buying in. The one thing that all this QE has done is it's made it a sort of a TINA market. There is no alternative to being overweight equities market.
As long as money managers dole out that kind of advice, it looks like we'll be seeing more records in the markets.
Well, the House has one, the Senate has one too, and today President Obama sent Congress his fiscal year 2014 budget proposal. The $3.8 trillion spending plan would be dead on arrival in the House, but it is designed to jumpstart talks to achieve a so-called grand plan with Republicans, sort of middle-of-the-road Republicans in the Senate, most especially, to tame the nation's deficit. The Obama blueprint out today includes deficit reductions of $1.8 trillion over the next decade, achieved through higher taxes on the wealthiest Americans, including a 30% tax rate on those pulling in more than $1 million a year of income. And as expected, there's a reduction in payments to Medicare providers and cutbacks in cost of living increases to Social Security recipients. The proposal also nearly doubles federal taxes on cigarettes to $1.95 a pack in order to fund a new preschool program. For more now on the president's spending plan, we're joined by Alan Krueger, chair of the White House Council of Economic Advisors. Mr. Krueger, welcome back. Great to have you with us.
Thank you.
One of the biggest items in this budget are the savings, some $230 billion, largely from slower growth of Social Security benefits that come from using a different kind of inflation measure. Whose benefits will be reduced, and on average by how much?
The proposal to switch to use the Chained Consumer Price Index to adjust for inflation is an idea that came up in the negotiations with Speaker Boehner and Senator McConnell. It's a technical fix. It addresses some issues that economists have raised in the past about the Consumer Price Index. And the Congressional Budget Office concludes that it grows about a quarter of a percentage point more slowly, not very much in any particular year. One thing I would add, Tyler, is the president has insisted all along that we include safeguards for the most vulnerable, that we protect the oldest old, that their benefits are adjusted, as well as those who are just barely getting by.
So not everyone's Social Security benefit would be reduced as a result of the switch to the so-called changed CPI. There would be some blunting in there for certain individuals. And are we talking here for the average check a difference of dollars, $10, $5? What? Do you have any idea?
Well, it accumulates over time because the chained index grows more slowly. And the protections that the president has built in would kick in at age 76. So it helps to protect the oldest old, and that gets phased in over time for individuals.
$370 billion worth of Medicare cuts in the program. What do they consist of? Do they largely come from reduced payments to drug makers?
A lot comes from reduced payments to providers. The president has been very clear that he's not going to simply shift costs onto seniors, that he wants to have more efficiency in the system so that we're not reducing quality and raising the cost for our seniors. And he also would have more means testing as part of Medicare.
How much more, then, will those affluent, supposedly affluent Medicare recipients who pay premiums under Part B and D, how much more are they likely to pay, and what's the measure of affluent for this case?
It's a sliding scale, and offhand, I don't recall, I'm afraid, exactly where the cutoff was for the means testing to start in for the premiums. All
right, let's talk about where the $580 billion in additional revenues come from. One area is the so-called Buffett rule, which would impose a 30% minimum tax on people whose incomes are more than $1 million a year. Let me understand this, if I might. Is this 30% on the marginal income above $1 million, or a flat tax on anyone who has incomes of $1 million or more, should we be so lucky?
It's a marginal tax, so it's on the income above.
Does it include all sources of income, including dividends, capital gains, and carried interest, or what?
It does. It broadly defines income.
All right, let's talk about the tobacco tax. It's some $78 billion, and this would go to fund exactly what?
It goes to fund the universal pre-kindergarten program. Research has shown that students benefit throughout their lives if they get an early start in their education. High-quality preschool seems to be a very effective payoff for the investment. So I think this is a very good use of funds, and I think it will also discourage more teenagers from starting smoking in the first place.
And the growth forecasts in the plan are about 2.3% in the later years of the 10-year plan. Is there anything we can do in the country to get growth going faster than that? That's lower than it's been in this country over the past 50 years, for example.
Well, the budget is a plan to strengthen growth, and speed up job creation. That's exactly what the president has designed the budget to do. So it's critical that we make the kinds of investments that will speed up growth, like investing more in our infrastructure, our roads and our highways, enabling more people to go on to college, helping youngsters go to preschool. That will help growth in the long run. But because of slower population growth and slower growth in the working age population, in the assumptions in the budget, and we tried to be modest in our assumptions, we assume that the long run rate of growth is around 2.3, 2.4%, about the same as the Congressional Budget Office.
I'm afraid we have to leave it there. Mr. Krueger, thank you again for being with us.
My pleasure.
From the U.S. economy to the global economy, easy monetary policy is one of the reasons that the world economy is getting stronger, according to the chief of the International Monetary Fund. Christine Lagarde, speaking today at the Economic Club of New York, which I attended, said inflation expectations are stable, giving central banks around the world greater leeway to support growth.
The good news is that after a particularly volatile period, financial conditions are showing signs of improvement. You, of course, have noticed. Thanks to the action of policymakers, the economic world no longer looks quite as dangerous as it did 9 months ago. Yet, we do not expect global growth to be much higher this year than last year.
Lagarde went on to say that the U.S. economy is making rapid progress, but she said U.S. budget cuts are, quote, too deep in some areas while leaving untouched key drivers of long-term spending.
In another sign of recovery in housing, mortgage applications rose 4.5% last week as interest rates fell to their lowest level since January. The Mortgage Bankers Association says much of that increase was from existing homeowners whose rising equity increasingly lets them refinance their current loans at cheaper rates. Requests for loans on new purchases actually dipped 1%.
One company that's benefiting from that boom in home loans, Taylor Morrison. This is the 6th largest home builder in the U.S., and today it went public. Trading on the New York Stock Exchange under the ticker symbol TMHC, Taylor Morrison's IPO opened at $22 a share and closed with a gain of almost 5%. I caught up with CEO Sheryl Palmer at the NYSE today and asked her why she decided to go public now.
You know, it's the perfect time. And when we look at where we are in the recovery and what has happened with the consumer mindset, it's actually the perfect time. We've also spent the 2 years, 3 years positioning the business just for today. And when we look at where the company is and the opportunity ahead with our geographic footprint in some of the best markets in the United States, it's a perfect time.
So Sheryl, you talk about the recovery. Is this housing recovery for real? What do you think?
Oh, it is. We've watched over the last 12 months a lot of momentum in the recovery, and we're seeing it across the board. When you look at the mortgage business, when you look at affordability, when you look at what has happened to inventory across our markets, and really most importantly, the consumer mindset and the security they have in their own personal situations, I think we're in very early innings.
So Taylor Morrison operates in markets like California and Texas, Arizona, Florida, parts of Canada. Of those markets, which one is the strongest right now?
You know, the great news is we have strength across all of our markets. Certainly, we've seen just remarkable results in Arizona and Phoenix. You know, it probably dropped the furthest, and parts of California are just on fire. But I would tell you equally across all of the business, we're seeing really wonderful results.
So how would you describe your sales so far this year?
Our first quarter this year versus first quarter last year is up on all metrics. It's up in sales, closings. If we look at the customer contracts we have in our what we call our order book, our backlog today, I think in the U.S. we're up 150% over first quarter last year.
Right now we see mortgage rates super low. What happens when they start going up? What impact could that have on your business?
If mortgage rates are going up, that means the economy is improving. I don't think we expect this ridiculous amount of change over the next couple years. So I think we still have some good time ahead of us. But over time, we're going to start to see those inch up.
So tell us about your stock, your IPO today. How do you feel how it's been doing? It's been sort of bouncing around.
I think we're going to see some movement all day. I think that's good. I think that's exciting. It's what's supposed to happen. We priced at the highest point in the range. We oversold the subscription. So actually, we feel so fortunate, and I'm excited to see how the day continues.
So you're going to be talking to a lot of investors now. What is your pitch to investors about why they should buy Taylor Morrison?
What Taylor Morrison is we are a top home builder in some of the best markets in the United States today. We have a remarkable business, our Monarch business in Canada, that's been in business for almost 100 years. And when you look at that and you look at where the business is today and the results we've generated over the last many years, it's a pretty special story.
Taylor Morrison is the second home builder to go public this year. Tri Pointe Homes came to market in January, and then just this week, another home builder, William Lyon Homes, filed for an IPO.
Coming up, women and retirement. But first, a look at the international markets.
Merck and Pfizer were the best performing blue chips today, and that's where we begin our market focus. The FDA green-lighted big projects, accepting a new antifungal proposal from Merck and granting Pfizer's experimental breast cancer drug breakthrough status. Shares of both Merck and Pfizer surged nearly 3%.
It was a different story, though, Susie. For hospital stocks, Health Management Associates reduced its outlook for 2013 earnings and revenue, citing weak patient admissions in the first quarter of the year. That dragged on the stock and the entire sector. HMA down more than 16%, followed by Tenet at more than 5%, to Community Health at more than 3.5%.
Fastenal also down on guidance that its sales growth was hurt partially by global economic uncertainty. Fastenal sells industrial and construction supplies. And even though the company doubled the quarterly dividend, shares tumbled about 3.5%, closing at $49.
Reporting after the bell, the retailer Bed Bath & Beyond's earnings were in line, revenues beat, but guidance for the current quarter below what analysts had expected because the company is modeling higher tax charges as it integrates World Market stores. Bed Bath & Beyond is up almost 20% so far this year and up again today before the close at $65.50. Yum Brands feeling the effects of bird flu fears on their KFC outlets in China. Yum announcing that same-store sales in China were down 16% year to year in March. Yum calling it a significant negative impact. Shares of Yum Brands up on the day lost ground when the company issued its release.
Switching gears here, saving for retirement is different for men and women. A new Prudential financial survey finds the top priority for men is to maintain their current lifestyle in retirement. But for women, the goal is to not become a financial burden to their loved ones. Well, whatever the objective, many women are finding it's never too late to ramp up savings to meet their retirement goals. Sharon Epperson reports.
Lauren Palmer, a South Carolina funeral home owner, helps families face the finality of passing on.
Selecting a casket can be very confusing.
Making the arrangements is instructive. She knows it's time to ramp up planning for her own financial future now.
I have learned that in this business, just as families pre-plan and they come in and they make funeral arrangements and pay for them in advance, likewise, that same principle applies with retirement planning.
Palmer, the third generation to own this family business, knows careful retirement planning is also important for her son's future. But for this 56-year-old, staying on track hasn't been easy.
I've been through a divorce. I've raised a son as a single parent. I have educated my son. He has been to college, mortuary school, and then, of course, the crises of the deaths of every member of my family that's been in this business occurred.
Many women face similar obstacles that have impacted their retirement savings.
We found that there was a challenge with the women to be able to save the way they'd like to save because of their family needs needing to come first.
A recent study by the State Farm Center for Women in Financial Services at the American College found that only 42% of women surveyed save a certain amount each month.
About 64% of all the women said that their family's needs are really impeding their ability to save for retirement. They will have to take time away from work which of course will affect their pensions and so forth. They are also actually making less money than men. So again, how much money they'll be able to save is affected by those factors.
According to the U.S. Labor Department, full-time working women earn about 78 cents for every dollar men earn. Women also spend 12 years out of the workforce on average to care for their families.
We look at caregiving for children, caregiving for parents, possible layoffs, disabilities.
Financial planner Deborah Breedlove says considering these scenarios and how they will impact their own finances encourages some women to start to save more.
We have to put plans in action for those what ifs. And then we're realistic about how much money you're going to need at retirement.
Breedlove says using 401ks, IRAs, Roth accounts, and diversifying investments within those portfolios helps most clients reach their intended goals.
I wish I had more retirement savings at this time.
But Palmer says she now has an effective plan in place. She's putting herself first so she can leave a legacy for her family. For Nightly Business Report, I'm Sharon Epperson.
Our Tax Tips series continues tomorrow with a look at your refund. This year, tax refund checks are even more critical to many household budgets. Find out who's saving, who's spending, and where all that money's actually going.
Still ahead on the program, we'll introduce you to a company that's bringing manufacturing back to Detroit, one watch at a time. But first, here's a look at how commodities, treasuries, and currencies fare today. If you think about manufacturing in Detroit, the first thing you probably picture is cars. But one company is trying to change all that, using some of Motor City's skilled workforce to make something completely different. Mary Thompson is in Detroit and has more for us now. Mary, fill us in.
Well, Susie, the name is old, but the company is new. Here at Shynola's 30,000 square foot factory in Detroit, they can make over 1 million watches a year. But that's in the future, a future that's intimately tied to Detroit.
In the Motor City, Shynola's making motors for its watches, part of Shynola's plan to revive U.S. watchmaking in a town in need of life support.
It's like a crazy idea to make watches in the United States again, but it's possible.
Olivier Dubal manages Shynola's watch factory, a venture crazy to some given Asia and Switzerland's half-century dominance of the industry, possible to Shynola because of Detroit.
If you get in your car, you can drive around Detroit and you can understand the past. And the people we met weren't so focused on the past, they were focused on the future and where this was going. That energy is what we wanted to tie into, and that helped evolve the Shynola story.
CEO Heath Carr says Detroit is so crucial to the Shynola story, its watch face bears the city's name, and Shynola will only partner with retailers that visit the factory floor. Here, with steady hands and good eyes, 12 workers put together a movement or a watch's motors, 48 pieces with tiny screws. But whether Shynola's story of high-end watches made here in the U.S. sells, Mehmet Tangoran of the luxury website Hotlook says customers will decide.
I think it's admirable that they're trying to enter into a market that's very competitive, but I think if the product's right and the styling's right, I think the consumer will be the judge.
Retailing for $475 to $995, Shynola starts assembling at 65 watch styles next month and selling them in June. New products putting a new face on Detroit.
Now about that name, these days Shynola makes high-end bikes and leather goods along with watches, having bought the name from the former Shoe Shine company, a name typically uttered in a phrase that I can't utter on TV. Back to you.
You know, they're really good-looking watches, and it's so refreshing to see an entrepreneur doing all this. I mean, what was your take looking? You think it's going to succeed?
I think they've got a really great story to tell. They've got a really neat marketing package. And as you pointed out, Susie, they have a beautiful product. And, you know, they did sell a limited edition online, and it sold out in a week. So that gives you some indication of what demand could be like.
Those are some funky offices there, Mary.
Yeah, it's very cool. I wish I could show you this sweeping view. They have beautiful displays everywhere. They have the high-end bikes hanging on the walls. It's a great space for this company, which again is backed by some savvy retail executives, people with experience in companies like Fossil, of course, which made apparel and accessories.
Fascinating story. Thank you so much, Mary. Mary Thompson reporting from Detroit. Now here's a look at what's coming up tomorrow on Nightly Business Report. Realty Track releases its foreclosure report for the first quarter. We'll also get a check on the job market with the release of weekly jobless claims. And top bank CEOs meet with President Obama.
And that'll do it for tonight's edition of Nightly Business Report. Thanks so much for watching. I'm Tyler Matheson.
And I'm Susie Garib. Have a great evening, everyone. You too, Tyler.
You too.
We'll see all of you tomorrow.
Nightly Business Report has been brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Real Money helps you think through ideas for investing and trading stocks. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media. We are TheStreet.com.
I'm Susie Garib with the Nightly Business Report News Brief. Stocks sprinted to more records today, a broad-based rally that pushed the Dow and the S&P 500 to fresh all-time highs. The Dow surging 129 points, closing at a record 14,802. The Nasdaq up 59, fueled by big gains in tech companies, and the S&P 500 shot up 19 points. Helping the markets, strong import data in China and minutes from the Federal Reserve's latest meeting. Most Fed policymakers want to pull back on current stimulus measures, but many investors think March's weak jobs report means those easy money policies will be around a long time. And the White House released a $3.8 trillion budget plan that calls for higher taxes on the wealthy and cuts to Social Security and Medicare next year. Be sure to tune in to Nightly Business Report here on your public television station.